John, thank you for taking some time to dig into student loans a little deeper here. Our resident financial planning expert, Will, took the deep dive into everything student loan forgiveness proposed here by the Biden administration. The $10,000 in student loan forgiveness. We're going to jump right in, hit the high level points, things you need to know, and some opportunities for you to take advantage of. So, Will, let's dive right into it. $10,000 per person. Talk us through the high level things we need to know here.
The high level overview, like you said, $10,000 for each individual borrower. If your income is under $125,000 for a single person, or $250,000 for a married couple, or if you file as a head of household. So big thing to keep in mind here is they are looking at your 2020 or 2021 income. So if you made under those limits in either of those years, it does not have to be both, but either one of those years, if your income was below those limits, you will be eligible for that student loan forgiveness. Also, it is a cliff income limit. So what this means is if you've made even a single dollar above those limits, you do not qualify for any of the forgiveness. So this is a big change from other tax rules that have phase outs in them. This will not have any phase outs, so it's either all or nothing. You're either under those income limits or you're not, and you're kind of out of luck.
On that, how are they calculating the 125,000 or the 250,000? Is it, top line gross income? Is it bottom line? How are they coming to that number?
Great question. So it's adjusted gross income. So this is your gross income minus any tax deductions you may qualify for. Good news, this does include the 401k contributions you may make, or any IRA contributions you may make, or HSA contributions as well. So if you have been a good saver, there is a good chance that you do qualify for this, depending on your income, obviously. But there are opportunities to reduce that income, or should I say, there have been opportunities to reduce that income, because since, like I mentioned, they're taking into account the 2020 and 2021 years. If you have already filed your tax returns and you've already filed your taxes, there's really not a whole lot you can do to go back and change that AGI number. That AGI number is kind of set in stone, unless you have filed an extension with your CPA, and your taxes wouldn't be due until then October. There could be some planning around that if you do have an extension and you are eligible to maybe reduce that AGI a little bit more, and get yourself under those thresholds. But if not, there's really not a whole lot you can do to change it, unfortunately.
Gotcha. And so I did see some stuff. Some people may qualify for 20,000 in student loan forgiveness. What would someone be able to get 10, and why some 20?
Yeah, so the $20,000 number comes from if you had received Pell Grants. So Pell Grants are for lower income households, to send children to college if they don't have a lot of assets to do it on their own. The good news is if you have received any amount of Pell Grants at all, right now it looks like you do qualify for that $20,000. So whether you got a $500 Pell Grant, or more like a $10,000 Pell Grant, it does not matter. As long as you've qualified and accepted a single Pell Grant, you do qualify for that $20,000 of loan forgiveness.
Awesome. So now, is this forgiveness tax-free? Is it taxable? Do I get it all up front and I got to pay something later for it? How's that work?
Typically, when a loan is forgiven, it is viewed as taxable income by the IRS. For this specific loan forgiveness program, because of some changes made to the tax code previously in 2021, none of this will be treated as taxable income. So there will be no real negative effects. You will just get that $10,000 off of your student loan balance and move on with your day, which is really, really great.
Okay. So what if I've already paid off my student loans? What if I had federal loans and I've already, taken the time to pay them off?
Yeah, so great question there. It depends on when those were paid off, right? So for anyone who paid any amount of money before March of 2020, when this first student loan pause went into effect, there is no recouping those, right? You are kind of out of luck. That money's already been paid and it's gone. For anyone that saw the loan pause, said, hey, I have a lot of discretionary income, I don't need it all, I'm going to take advantage of this 0% interest and really get ahead on my student loans. There is some good news for someone in a situation like that. So if that sounds like you do have the option to contact your student loan provider and ask for a refund of all the money that you have paid since March of 2020. So if you had $15,000 in student loans on March of 2020 and were like, I want to be really aggressive, I'm tired of having these, and you paid them all down, and finished last month before they announced this student loan forgiveness, you can call up your student loan provider, say, hey, I want a refund of every dollar I've paid since March of 2020. They'll send you that $15,000 back. They'll apply that $15,000 to your loan amount again. And then as soon as that student loan forgiveness hits, if you are eligible, $10,000 will be wiped away. Then all you will have to do is come up with that extra $5,000, pay that down, and you will have that $10,000 in your bank account still, that you can then do with whatever you want. So that's pretty cool.
What if folks they get the $10,000 forgiveness and they still have more loans left to do? What are the options there?
Right. So another huge thing that this proposal is talking about changing is the repayment of student loans going forward. So the headline is $10,000 off your loans. That's what everybody's talking about. That's the big thing. But the big change of this bill is proposing an adjustment to how student loans get paid going forward, as well as the income-based repayment plans that go along with that repayment. So the main one I want to touch on here is called the income-driven repayment plan. That has the most changes to it and the most impactful changes to it. So if you're not familiar with that plan, it allows you to make monthly payments based on your income. They have a really complex calculation that goes along with it. But basically, whatever you're making, you take a certain percentage of that and pay it towards your loans every month. And if you do that for every month, never miss a payment, always recertify your income, follow the rules, in 20 years, the remaining balance of that debt will be forgiven. So a huge change they made to this was dropping the payment amount percentage from about 10 to 20% down all the way to 5% now.
I think we have an example of that we can show here. Will, what you were highlighting there, in the kind of let's go on the far right hand side. If you're married, a couple with 3 kids, and you make $175,000, you can see on the old plan, go section 3. What am I trying to say? Rows down there, you can see the percentage of discretionary income that you used to have to pay, about 15%. You could be paying as much as $1,500 a month. Now it's 10%, where you only have to pay $850. So pretty good savings someone could take advantage of there under this new income repayment plan.
100%, as well as the fact that this is based off of your adjusted gross income. So like we mentioned in the beginning, there's a ton of planning opportunity around contributing to tax deferred accounts, which in turn lower your adjusted gross income, which can then allow you to save a lot of money on the front end in tax deferred accounts, as well as be paying less in student loans each month until those eventually do get forgiven for you at the end of that plan. So
a huge opportunity for us, like talking our book here a little bit. If you take advantage of some savings opportunities, prior to the calculation of your AGI, you can save yourself a bunch of money. And then if your recalculation of your payment amount gets reduced, in that example, $1,500 to $850, there's a huge opportunity to be saving some money there. Maybe instead of going and buying that car or whatever it may be, if you take advantage of that reduced payment, you really set yourself up.
Yeah, and some more changes that I do want to highlight in the new income-driven repayment plans. They also did change the calculation to make that more favorable as well of discretionary income. So They changed that calculation to 150% of the poverty line to 225% of the poverty line. Long story short, just another way that you're going to be paying less back in student loans along the course of your repayment plan. Another thing that they did was as well, they're going to begin paying the amount of interest that your minimum monthly payment does not cover. So no more are the days of making minimum payments according to your AGI while watching your loan balance balloon and balloon and balloon over time, adding to the stress of your student loans. Now the government will pay that unpaid interest on your behalf, allowing your student loan balance to remain the same, right? They're not going to lower it for you, but it will at least stay the same, so you won't have that added stress of huge loans ballooning to the point where you feel like it's spiraling out of control. Another point that I want to touch on regarding the IDR plans is that after 2025, any loans that are forgiven will then be counted as taxable income again. So at the beginning of this video, I did mention that they had paused that. That pause will expire in 2025. So definitely be on the lookout for that. A lot of planning has to go around how we're going to pay for that huge tax bill, especially if you have, student loans that are extremely, extremely high. That tax consequence can be, a lot to deal with.
So on that, we talked a little bit about some of the planning opportunities and being prepared for all of that. We talked about saving in 401ks and IRAs to help reduce your AGI. What other planning opportunities are there? I know there's been some talk about, the recertifying of your income. Can you kind of talk through what that?
So if you were on one of these income-driven repayment plans before the pause in March of 2020, you may not, and as you have known since March of 2020, you have not been required to recertify your income with the federal government. So that has been paused along with the payments and interest on your loans. That has not been set in stone yet, but there's a potential that could not have to be recertified until July of 2024. So as an example, take someone who previous to March of 2020 was making about $50,000 a year and paying based on their payments, and has since gotten many raises and changed jobs, and now maybe making $125,000. They will not have to recertify that income, in turn keeping their monthly payment very, very, very low. And this looks like it might not have to be recertified until July of 2024, which would be a huge opportunity to make sure your payments are staying low, giving you opportunities to save that money, invest that money, and do with it what you want. So that's another awesome feature that we need to keep in mind going forward. And another one that's not quite set in stone, none of this is set in stone yet, but just part of the proposed solutions to some of the student loan problems, that could be a big piece that plays into it.
Awesome. So next steps, right? So I think I qualify. I think I get the $10,000, right? What do I do next? How do I get my $10,000?
So your first step is going to be make sure that you have direct federal loans. If you have private student loans, those will not qualify for the $10,000 in loan forgiveness. Those can also not be consolidated into direct federal loans. However, there are some other federal loans out there that don't qualify yet, but have the potential to be consolidated into direct federal loans. So that's going to be your first step. Make sure your loans are direct federal loans. Your second step will be to fill out an application. This application is not out as of yet. The Department of Education is working on an application to put out to the public, and keep your ears to the ground. When that comes out, you will need to certify your income in 2020 and 2021 with them. Send that in. I'm not sure what's all going to be on that application, but make sure you get that in. And then as soon as that happens, they should be able to forgive those loans for you.
Awesome. Well, Will, I want to thank you for taking a deep dive. I know our clients appreciate it, and anyone that's not our client, if you have a question, reach out, give us a call. We're happy to answer in any way we can. Lots of moving parts here, lots of information yet to, be given in the final proposal to be made. But again, just want to thank you for your time and putting the effort into that. If you have questions on your particular situation, everyone's situation is unique. Reach out to Will, reach out to our team. We'd be happy to answer any questions and help you plan in any way possible. So again, Will, thank you for your time. Everyone, thanks for watching, and we will talk to you all very soon.